Hi everyone, Bill Lethman here for MoneyEvolution.com. In today's video, I'm going to be helping to answer the question, should I buy an annuity? So this video is kind of a wrap up to an entire series where I've been talking all about annuities. I've been talking about the 4 different types of annuities and some of the pros and the cons of buying an annuity for your retirement. So if you like, we'll have some links here below in the description below this video where you can access some of those other videos. So here today in this video, I want to kind of take a much more broad look at annuities and maybe helping to answer the question, where does an annuity potentially fit into your overall retirement situation? And I think there's actually a couple of very specific reasons that we oftentimes see annuities fitting into a client's retirement. So first of all, let's start right at the very beginning. So one of the things that we talk about a lot in some of these videos are the 7 core elements of retirement planning. And in those core elements, we talk about determining how much money you might need to retire, calculating your retirement gaps, and we talk about taxes, we talk about Social Security benefits and what to do with your 401k. And number 7 on that list of 7 core elements is the investment piece of things, and that's kind of where this annuity fits in, or any investment really. So hopefully, before you get to that point where you're trying to decide what investments are going to help you achieve those retirement goals, you've already been through those other 7 core elements. So when we talk about retirement planning and we talk about the retirement portfolio as a piece here, a lot of times what you'll hear people talking about is this 60-40 retirement split. And what that means when you see that is they're talking about a split of stocks to bonds. And of course there's other types of investments that can kind of fit into that, but that's generally probably the most widely accepted asset allocation that you see for people as they approach retirement. And where we see annuities fitting in potentially for most people is as a replacement or as an alternative, let's say, for that 40% of the portfolio that would be in bonds or in other fixed income instruments. And so when we think about that, what we want those bonds to do, or what we want that fixed income piece to do, is number 1 is we want that to hopefully produce some income. And if we think back maybe to your parents or grandparents or previous generations, and you think about the opportunities they had to create income out of these fixed income instruments like CDs or treasuries, rates were much higher back then. Somebody could basically just buy a portfolio of CDs from the bank and generate a pretty decent rate of return to live off of just that interest in retirement. But here in January of 2019, if we look at the 10-year Treasury, just as an example, it's actually under 2.7% right now at the time we're filming this, And so if you think about $100,000 invested in that 10-year Treasury, that's only going to produce about $2,700 a year of income. So in many cases, an annuity, depending on your age and the type of annuity you're looking at, could potentially give you a much higher rate of income or guaranteed withdrawal or guaranteed income off of that annuity than what you could get in other fixed income instruments. Number 2 that we oftentimes look at annuities for is as protection. And that's the same thing too, what we want this 40% to do if we're talking about bonds or CDs. When the stock market goes down like it did a couple of times here in 2008, we had that big financial crisis. The stock market lost over 50% of its value in about a 12-month time period. And then in 2000, we had the internet bubble crash, and that one lasted for almost 3 years. From 2000 to 2002, we saw again about a 50% decline in the stock market. So as you approach retirement, we need to start thinking about something called the sequencing of returns and how some of those bad years can really influence your ability to maintain that withdrawal out of your portfolio on an ongoing basis. So certain annuities, and not all annuities, but certain annuities do have some very good protections. They have 100% principal protection. In the case of like a fixed annuity or a fixed indexed annuity, you can have something where even if the market goes down, then those investments are going to actually just maintain at least their regular principal. And that may not necessarily be the case for the 40% that we traditionally would look at in bonds. Something we've talked about a lot is that relationship of interest rates and the principal value or the value of those underlying bonds. So as rates go up, principal values go down, and rates go down, principal values go up. So when we look at even the returns of some of these maybe fixed income bond mutual funds and things, we might see some great returns. Some things we might say are actually pretty decent track records and everything, but a lot of that track record has been built in an environment that since the early 80s, interest rates have been going down. And so those returns, we believe, are not necessarily going to be easily replicated because interest rates, if we're talking about a 10-year treasury at 2.7%, that can only go so much lower. In fact, actually, the Fed is already starting to raise rates, and we think that, there's a good chance that those bonds might come up. And so what that means is for the existing bonds that you own, the principal value of those bonds could be dropping as those bonds become less valuable when interest rates rise. So that's kind of where we see an annuity, and the way to kind of think about this is as an alternative to maybe some of the other fixed income instruments that might be out there from other bonds or CDs and things like that, and looking at where that might fit into your portfolio. So if you haven't maybe considered annuities as a part of your overall retirement planning strategy, not saying it's necessarily right for you, but you might want to take a look at it and see if it does have a place within your retirement portfolio. Hope you got some great value out of the video here today. Again, we'll have some links to some of those other videos, and if you have any questions, please feel free to reach out to us, and we'll look forward to seeing you back in one of my next videos. Thanks.